Hello, and I'm Dan Castle from Winthrop Wealth. I'm the Director of Advanced Planning. And when we're working with clients with their estate plans and how they'd like things to go on to the next generation after they pass, we talk a lot about assets that they own, such as real estate, investment accounts, things like that. But one thing we don't often consider is the reality of the world today, in which we have much of our life is online, our accounts, our other things that we access that way. And that's an important part of estate planning to consider. So today I'm here with Glynn, who's an attorney with Nutter, McLennan and Fish here in Boston. And she's going to be talking to us about planning for our digital assets.
Hello. Yes, thank you. So today I'm talking about digital assets, which are becoming an increasingly common but often overlooked piece of our estate plans. We need to ensure that these assets are integrated into our plans while also ensuring tax efficiency and making sure we are conforming to reporting requirements. And these requirements are currently in flux. The IRS has only recently created a definition for digital assets, and they have added questions to certain tax returns on these assets. So it is an area that the IRS is putting more attention on. Today, I will define digital assets, both what the IRS defines digital assets as and what we commonly think of as digital assets. I'll discuss their tax treatment and reporting requirements on certain tax returns. And I'll also address some of the challenges around doing your estate planning with these assets, which is ensuring that they transfer to the next generation, and also how do we value these assets. So, what are digital assets? The IRS has now defined these, and they have defined them as any digital representation of value that are recorded on a cryptographically secured distributed ledger or any similar technology. For example, these can include non-fungible tokens, which are referred to as NFTs, and virtual currencies such as cryptocurrency and stablecoins. The IRS has further said if a particular asset has the characteristic of a digital asset, it will be treated as a digital asset for federal transfer tax purposes. So what does this actually mean? What type of assets are we looking at here? Cryptocurrencies such as Bitcoin and Ethereum are assets that are becoming increasingly common. And if we're looking at these in the traditional sense, they have no physical counterpart. And if you lose a private key for these assets, you can have a permanent loss of the asset. So clients must be sure to safeguard that private key if they're holding it in the traditional sense. However, there's also trading platforms that are springing up for these assets. So it's many, many possibilities in terms of the cryptocurrency world. The other one, as mentioned, is NFTs. And these are also, in the traditional sense, unique and cannot be replaced. We often hear about them in terms of certain unique digital artworks that individuals buy and sell at auctions, just as if we're thinking about artwork in the real world at an auction. Other items that can be fit into this definition are digital intellectual property, such as ebooks, patents, domain names, and also one last big group can be revenue generating social media accounts and also online businesses. Something I learned about recently with a client was that certain kids are also now playing video games online, and those can generate crypto tokens, which then the kids can sell for real American dollars, or you can hold them as investments. So there's a whole world of these assets that I'm only learning about as well. But again, if you're getting crypto tokens and you're selling them for cash, think about the IRS definition. And the IRS is going to treat that as an asset, which is going to get taxed. So try to think about these in terms of that IRS definition, where if a particular asset has the characteristics of a digital asset, it will be treated as a digital asset. So why is it, now that we know what we're talking about, why is it important to plan with these assets? The issue lies in protecting, transferring, and then securing these assets and making sure they pass to the next generation while also complying with regulations. This can lead to my area, which is the income tax, gift tax, and estate tax considerations and reporting requirements. The IRS is monitoring these assets more closely now. On the 2023 Form 1040, your individual income tax return, and also on the gift tax return, the Form 709, there was a new question that asks about digital assets. And you are required to either check yes or no on these tax returns, and you could not leave it blank. So the IRS really wants to know who is trading, who is holding these assets. The Form 706, the estate tax return, has not been updated since 2019, but it's very possible that it could be updated in a year or so, and there will also be a question on that tax return. And just to give you an idea of what the questions actually are, on the 1040, the income tax return, the government asks at any time during the tax year, did you receive as an award, payment, as a reward, award, or payment for property or services, or sell, exchange, or otherwise dispose of a digital asset? So essentially they're saying, did you get paid in crypto or did you sell crypto? Because if so, that's income and we want to know about it. And then on the 709, it says, does any gift or other transfer report on this Form 709 include a digital asset? So they're saying, did you gift this to someone, your children, anyone else? And again, you need to check yes or no. So that's going to flag all these returns to the IRS that you're dealing in those. And just to talk about how these are taxed, if you, cryptocurrencies are subject to capital gains tax on sale or transfer, as are most digital assets. So you need to be tracking the basis in these as well, which can be tough, especially if, these aren't securities that are traded on common general securities that are being valued every day. So one, you need to track basis. Two, these can be really volatile and decrease and increase substantially. So let's say you gift these assets on X date. What if there's a huge jump in the assets on that date and you're using a lot more of your exemption than you thought? Or what if you sell it on that date and you have a huge capital gains? So definitely track your basis and track what the fair market value of these assets are. Another problem there, especially for the Form 709 and the estate tax return, is valuation. It can be difficult for many of these. Bitcoin is now, you can look it up on the Wall Street Journal and there's a daily price to it. That's definitely becoming more standard. But for all of these other currencies, it's hard. Who is setting the value? Fair market value. For the Form 709 and the Form 706, what they want you to report is fair market value, which is what a willing buyer and a willing seller would pay for this. So if there isn't, the Wall Street Journal tracking the price of all 240 of these currencies, how are we coming up with a value? For me, the important thing there will be just making sure you are disclosing everything, especially on the 709, making sure you're disclosing the gift because that starts the statute of limitations. And I always advise clients to over-report. If you settle on a value, give all the information on how you got to that value. It makes it harder for the IRS to come back and say, you didn't report, so there's no statute of limitations, or we're going to challenge this. And I do feel like this is possibly a place where whole industries are going to pop up to value these assets and to provide, qualified appraisals on here's what this NFT is, here's what this currency is. In terms of actually planning with these assets, I was thinking about strategies that might be helpful, and something that came to mind, I think, would be for these if you have one of these assets that you think is going to rapidly appreciate, and let's say you're a federally taxable individual for estate tax purposes, A good option to look into is a GRAT. You might have already, since your advisors are probably telling you to use all your exemption for the sunset, you might, although who knows, if the sunset is going to happen of the federal estate tax exemption. If you're one of the people who listen to your advisors and already used all of your federal estate tax exemption, you can make a gift of your cryptocurrency to a vehicle called a GRAT, which is a grantor retained annuity trust. And you can do what's known as a zeroed out GRAT. And you won't use any of your estate or gift tax exemption. And if you've already used all your exemption, you could still do this gift. And essentially what you're doing with a GRAT is you're betting that the asset is going to appreciate at a greater rate than an IRS defined interest rate. You're going to retain an annuity equal to the IRS defined interest rate for December 2024. Right now, that interest rate is 5%. So if whatever you transfer to the GRATs increases at a rate that is greater than 5%, all of the appreciation is going to pass to your descendants, your trust beneficiaries, whoever is beneficiary of that GRAT, completely transfer tax free. And the only downside to this, if the stock doesn't appreciate, is that you're basically just out some legal fees to me for setting up the GRAT. But there's no loss of exemption. There's no actually bad result. It's just the planning, the setting it up that you're losing. So if you transferred it to a GRAT, that removes it from your taxable estate. So you could really be looking at substantial savings there. But again, look at one important consideration here, and this is my disclaimer, is if you're not federally taxable, meaning federally estate taxable, it might make more sense for you to hold until your death, because then you get a step up in basis to date of death value, and your descendants wouldn't have to pay any capital gains tax on that, since the basis is stepped up to date of death value. But if you are federally taxable, the estate tax rates are going to be higher and you will pay more tax on that end. So as my disclaimer, every client is different. So you definitely want to talk about this with your estate planners and your financial planners and figure out what the best solution is for you. My last point will be access. How do we make sure the next generation has access to these assets? The law is really still evolving on this. For crypto, again, companies are popping up who can help clients with this. One of them I was looking at recently was called Unchained, and they really are working in this inheritance space and making sure we can securely pass these assets down. But also my disclaimer there, no particular company is being endorsed by me. These are just companies I've heard of. But there's also case law and law surrounding whether your heirs, whether your personal representative named in your will, and whether your agents under your durable power of attorney can access not even assets, but information like your emails, text messages, other information like that. And often, since so much of the information on what we own is in our email, it's important for our personal representative named in our will or the agent under our durable power of attorney to be able to access this information. My advice, and what we now do in all of our wills, all of our durable powers of attorney, is to explicitly give your personal representative and the attorney under your power of attorney the power to access your email and these other digital assets. But there is certain case law in Massachusetts that says even with that authorization, these companies could still say, pursuant to our terms of service, these people are not allowed access to your email and therefore do not get this information. There is legislation out there to try to make a uniform approach to this. And if you name that person in your will and give them this access and give them this authorization, they can get access. But again, best practice right now is to just give as much to include that language in your wills, in your powers of attorney to give your personal representative that access. Or if you don't want them to be able to read your emails, maybe just limit it, take a look at that language and limit it in some way. And a few more points before we end is that if an individual owns a website, make sure that the payment for that website continues to be paid if they were to pass away or become incapacitated. If it stops being paid, that domain name could go up for auction and somebody else could buy it and, take that domain name away from you. So if you run Smith & Sons and you have the smithandsons.com, make sure that keeps getting paid so that is not taken away from you. Also, this is something with every asset and with everything you're doing in estate planning, but pick a trusted person who you can name in your documents and give this information to so that the person who you name in your documents is carrying out what you would want with these assets. And also, most of my clients in the Northeast are not social media. People are making their money that way, but if it's important to you that your social media be maintained, lots of them have different rules around it, but some of them allow you to name legacy contacts who could manage it after you were to pass away. So that is a last thought. But yes, so the last thought as we're planning with digital assets is that whenever you're acquiring these assets, selling them, gifting them, receiving them as payment, make sure to talk to your tax, financial, estate planning advisors to make sure you're following reporting requirements and you're planning for these assets.
Well, thank you, Caitlin. One thing that comes to mind for me is, how things have changed over the decades. It used to be if somebody passed away, they had some papers in a lockbox or at the lawyer's office that the executor could look through and glean from that, what mom or dad wants done and where things are. And now we have that all online. And it creates a dilemma a little bit because, I may not want to share my passwords and biometrics to get into my cell phone and all that kind of thing now, but I want somebody to be able to have the ease of settling the estate at the time. So how do we protect our passwords now, but still have the ability that when the time comes for somebody to get that information, to be able to open our Facebook accounts or other things that they may need to get into that may have more than just social information, but often have a lot more that we own is held that way. So you mentioned NFTs, other things like that people own. So how can we protect that?
This is as I was saying, like a very unsettled part of the law. If you are named as, what the law is trying to settle right now is that if you are named as personal representative or attorney under the durable power of attorney, by naming you in that and giving you that digital assets power in the document, you are given what's known as lawful consent to be able to access these things. However, lots of, internet companies have been pushing back against these assets because they think these should be kept private. So this is definitely an evolving part of the law. And if I do know lots of clients, write down passwords or store them in a certain digital password keeper that would allow a trusted person to access at some point. But the law around that and whether someone else can access, your email account or your bank account is very unsettled. So it's a tricky area for us right now.
So something like a password management program might be the direction to go in, or to look in where one master password that you have and maybe could leave in a document or something like that. Although they get changed frequently.
Yeah, they get changed frequently. And also you don't want to leave your password somewhere, someone who you don't want to find it. So no, this is tough. And it's definitely not something I have the answer to right now.
Well, it's definitely an important and evolving area of planning and something to keep our eyes on. And thank you, Caitlin, for sharing this with us. This is important stuff. And as we do planning with clients in this realm, this is something to address. And Caitlin surely is one of the top minds in this area I've seen. And we'll be consulting with her and other attorneys as well about this, and make sure we don't forget this as you develop your trusts and your wills and other planning techniques. So thank you for joining us today. Thank you, Caitlin.
Thank you for having me.